It's Saturday, the 2nd of May 2020. Saracen Minerals released their quarterly report for the March quarter this week. It was probably a little bit better than expectations, I think. They had already done a sort of pre-quarterly announcement almost when they did a COVID-19 update probably 3 or 4 weeks ago. So some of the numbers were pretty well known about what the production was going to be, maybe within sort of 5 or 10,000 ounces. And they delivered 158,000 ounces at 1133 all-in sustaining cost. I think they've probably bucked the trend a little in that most producers have probably missed expectations and had rising costs and maybe a few production issues. Saracen seems to have been probably the star performer so far, particularly in terms of cash generated. A lot of the driver for that has been Thunderbox, which was producing less than $700 an ounce this quarter, Australian dollars, so huge margins there. The other operations, Karonie Dam, steadily rising costs, which I'll talk about in a second, and the Super Pit, their half share, doing okay as well, probably in line with expectations and previous guidance, which is about 60,000 ounces a quarter, but it's all sort of up in the air a little bit with them kind of recalibrating the business after they acquired it last year. As I said, they're getting very good revenues, and they've built a lot of cash this quarter. A sort of net cash build of more than 55 million there, up to 340 million, almost at a net cash position. I think they've got a slight debt still. They'll probably be about 400 million in debt after they've drawn some more debt. So they're probably going to be net cash after another 1 or 2 quarters. Sold their stake in Red 5, which I've talked about previously. So it seems like all the work they've been doing over the last sort of 12 months, where they've been investing a lot of money in the business, that's really starting to pay off now with some really, really, really good cash flow. I guess one of the themes, and this was emphasized on the conference call, is that Saracen's really it's kind of an equal weighted business. It's not beholden to one asset that's really going to drive its profitability. It's got 3 assets there, all about that 50,000 ounces. The consolidated Kalgoorlie consolidated, their half share there. That's probably the bigger producer, but is a lower margin business for now anyway. Potentially, if they can increase production and get costs down, it may start to be the star performer. I think longer term it probably will, because it just has that very good mine life. They're really probably going to come in well within guidance. I think they're guiding toward 500,000 ounces for the year, since that initial guidance was about 360,000, and then obviously they acquired the Super Pit as well. So I think they're guiding to 500,000 ounces plus, which you can see they've already done 375. So barring a major issue, they're easily going to be probably closer to 550, 530 maybe at the end of the financial year. I'll look at the individual operations a little bit. The COVID-19's probably, we've talked about that a fair bit in all these quarterlies. I'm a bit sick of reading it, to be honest. We all know it's an issue, and the companies are dealing with it, and it's generally not affecting production too much. They've put measures in place. The Super Pit, I think probably there were some questions on the conference call about this. They did have about a 9-day shutdown of the processing plant, so that affected the throughput and probably added up to about 5 to 10,000 ounces of production that they probably didn't get that they might have otherwise. So that's all done now, and then so the next quarter in June they should get a more processing time and produce more ounces. The cutback of the pit wall remediation, this east wall remediation, they've sort of guided that in September they're going to be coming up with a plan about that, what the next steps are. If you remember, that was a wall failure that happened 2 or 3 years ago. That's meaning that some areas of the pit are inaccessible at the moment. It's going to take, I think the previous guidance was it was going to take 2.5 to 3 years to fix it, and at a cost of a couple $100 million from memory. So they've kind of been deferring that and I guess doing the technical work to check if that's still the way they want to go. The other thing is that the gold price assumptions will have changed in the last sort of 6 to 12 months too, since they acquired the asset, with gold and Australian dollars trading above sort of 26.50 now. I guess it changes what they might want to do with that. I think that on the conference call, the CEO mentioned that they're more likely to do the wall remediation if with that higher gold price, because there's just so many ounces there that are inaccessible at the moment that will be very profitable at these gold prices, even if you have to spend a couple of $100 million to get to them. So I think they're guiding toward that September quarter. Seems like it's going to be quite important in terms of that east wall remediation, and also the resources and reserves. They're sort of recalibrating the mine plan, maybe changing some of the assumptions around the gold price as well to put in a higher gold price into the reserve model. So there's quite a bit happening. They also had this Brown Hill cutback, I think was a mine area sort of adjacent to the pit, adjacent to the super pit, and they took the opportunity to get quite a bit of mining done there. And I think that wasn't in the original plan when they acquired it from Barrick, and when Northern Star acquired their share from Newmont. Karonie Dam had an okay quarter. I think one of the key things in here is that these assets because of their large stockpile positions, they can overcome temporary issues. At Karonie Dam, it seems like the grade from the mining was a lot lower than had been previously. So it had been ticking up toward 3 grams a ton, and then this quarter they're saying this was a lower grade portion in the mine schedule, so it was fully expected. But because of that really good stockpile position, they're able to keep getting good throughput through the mill at decent grade. There was a little bit of a rise in cost there that would be due to that lower grade from the mining, and also they're a little bit reduced on how much they milled too. Oh, and that's the number of ounces. So that's partly responsible for the higher cost as well if they're producing a slightly fewer ounces. The other thing is they haven't got any of these expensive sort of third-party ore deals that they were doing for the last couple of years, and that would have really increased their cash flow at Karonie Dam. They've talked about the expansion of the mill to 3.2 million tonnes has been delayed slightly due to issues with the mill manufacturing, but that's only a sort of a 1 quarter delay, I think, and hopefully they can try and catch up some of that lost time as well. As I mentioned, Thunderbox has really been the star performer in terms of cost in particular. 50,000 ounces at less than $700 an ounce Australian. That's probably one of the best assets in Australia at the moment in terms of all-in sustaining costs. There's not many mines doing $700 an ounce, and that's partly due to this. I think there's a little diagram in here about just they're mining at the bottom of the pit, very low strip ratio, so almost getting pure ore at these depths and at good grade as well, and they'll have good stockpiles. I think the plan is at the end here to go underground. So I'm not sure. I don't think they're doing another cutback here, but they're doing this D zone pit as well, which is at the end of the other pit, and that I think they were doing some mining there as well and getting close to mining ore, but it's mainly been waste, I think, so far. They did have an issue with the pit. I think they mentioned it in here. There was a localized wall failure in the C zone. So you can see here there's significant underperformance in terms of mining. They didn't mine that much gold, but because the huge stockpiles they built up again in the last couple of quarters, they were able to keep the milling capacity at full bore. I think they're even slightly above capacity. They're running at about almost a 3 million ton run rate, and I think the mill is rated for 2.5 million tons, and they also had quite good recovery there. So that means they were still able to get that their highest production quarter ever at Thunderbox. So they have said that there's a plan in place for them to start milling higher grade ore in the stockpiles in the next quarter. I think they've sort of been keeping some of that higher grade ore for a rainy day, but now they've decided that they're going to chew through as much of it as they can to get cash flow into the business and build that cash balance ahead if there's any issues with the virus and whatnot. So that's an active decision they've taken. The exploration, I do like their exploration assets relative to some of the other bigger operators. They seem to have a lot of good satellite pits that are available and a clear path to extra production at some of these assets. I won't talk about at Bar has been something that's delivered very good results for a while. I think a lot of this will come out in the September quarter when they're going to do their review of resources and reserves, and they potentially might add a reserve here or at some of the other assets as well. Otto Bore, some really good results there, 15 at 11, 16 at 6, and this Wonder North at 22 meters at 6 grams, 24 meters at 6. These are all very good hits and just add to the potential mine plans at Thunderbox and Karonie Dam as well. So I think that's sort of the next phase. I don't know if there's a plan to increase the milling capacity at Thunderbox. They did talk about the parallels between where Thunderbox is at and where Karonie Dam was a couple of years ago. I don't know if they've got enough ore to justify an expansion just yet, and the mill's running at as I said, above nameplate often. So it seems like they've talked about they've got sort of 10 years of capacity in reserves at every asset. So that's a very good position to be in, and sort of unmatched. I think it's 10 years, might be slightly less, maybe it's 8 years, but it's definitely a very good reserve position they've built up over the last couple of years of those updates. As I said, they're only in a slightly net debt position. They did draw down another 45 million after this figure, so I guess the debt figure is more like 400 million now. Now again, that's really just to give themselves a bit of a buffer if there's any problems with the virus. 22, 28, it's not a bad price. It's probably, I think I said in the Regis video that Regis is probably amongst the best just because they're not delivering much into the hedge. But the Saracen does have, I think they're hedging about 35 to 40% over the next couple of quarters, and then it starts to dwindle away a little bit. So they're in a pretty good position there. I'm not a big. I know a lot of people knock companies for doing hedging, but the gold price was. It was sort of, I guess you get stuck in this thinking the gold price is going to stay at 2650 or higher for forever, but it is volatile and things can happen that make it go down. So I understand, and a lot of the issues that happen in the down market in the gold space in sort of 2013 to 2015, hedging did really help some companies. So I understand that's where a lot of these companies they've come from that environment where hedging was necessary to sustain themselves. So perhaps they'll start to be a bit more aggressive now and let those hedge positions dwindle from kind of 35 to 40% down to more like 20 to 25% over the next year or two, and try and maximize the higher gold price. It does look like we're in a good phase at the moment, and it's sort of not clear that there's going to be anything to come along and really knock the gold price back down to say $2,000 Australian an ounce. It looks like it's going to be elevated for some time, but I understand the caution involved. So that's, I thought it was a pretty good quarter in general from Saracen. Some other things they mentioned, they on the quarterly conference call, the free cash flow generation was almost $100 million this quarter, and I noted that Saracen really producing more cash flow than Northern Star, which has got a market cap double Saracen's, and I think that speaks somewhat to the overvaluation of Northern Star. And I'll do a video about the Northern Star quarterly probably next weekend. But Saracen seems to be, with that good reserve position, stable operations. They've invested a lot into the business. I think they've said they've got 2 years of underground development already invested into Thunderbox. So once they've done all that work and they're really they'll be able to get very good cash flow with the gold price where it is, and having invested the funds sort of earlier. I know that over the last couple of years, they were not generating a lot of free cash flow, and that was really as I invested a lot into the business, but it looks like it's going to start to pay dividends now. So that's probably all that I really noted. It was a very good quarter in general, and as I said, I think probably one of the strongest quarters across the gold space. The stock did gap up on Tuesday morning when the quarterly came out, and then that was a bit of a sell signal. I think it's still, it sold off very hard on Friday there with a lot of the other gold producers. I think there's probably a gold did bounce on Friday night Australian time, so it still looks better value than some of the others in that the top end of town. So the Northern Star and Evolution are probably the only ones that are really above Saracen in terms of market cap now. So well, obviously there's Newcrest as well, but I don't really cover Newcrest too much here because it's kind of in a different league altogether. But Evolution and Northern Star, I think, are more fully priced than Saracen. I still think there's more upside in the Saracen resources and reserves and mine life extensions and things like that. And they've shown an ability to execute consistently over the last couple of years, often upgrading guidance. I think sometimes they are a little bit conservative with their guidance figures, but they've comfortably shown they beat those figures, and they're a very good operating business. So all in all, pretty good quarter from Saracen, and continues to be one of my main sort of holdings at the bigger end of town. I think I've been holding it since this sort of September-October period, and I bought a few more in the transaction with the super pit transaction. I bought some in the raising there as well, but I think it's not cheap as most of the Australian those bigger cap miners like Evolution and Northern Star. None of them are cheap when compared to some of the smaller operators, but they do have those bigger assets, higher quality. But I think Saracen's still my pick of those three anyway. And that's probably enough for now. Thanks very much.